Please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Brands Group, a company spun off from Li & Fung.
The most profound change in retail is the last 10 years, by far. And people are going to look back at this moment and say, the internet changed everything.
Having global brands to bring it here.
Bruce Rockowitz, a seasoned player and an influential figure in fashion and retail. He's the former CEO of Li & Fung Group, the world's largest sourcing company.
And you will see bigger changes over the next 10 years than you've ever seen in the past.
In a move to stay relevant and in fashion, Li & Fung spun off its branded goods division in 2014 and put Rockowitz in charge.
You can imagine if you're a $20 billion company and $2 billion of it is a branded business, the focus is not there. We said, listen, if we split these two companies up, both companies could perform better because you'd be focused, you'd be driven, you separate balance sheets, separate management, full-time management. And so we spun it off. That was basically 3 years ago in July. We made the name up, we made the brand up, Global Brands Group, everything. And today we created a formidable new brand company.
Well, you were the CEO of a bigger group, a bigger sourcing giant.
Yes.
Were you happy to take on the role of a smaller company?
Very much so. In fact,
why is that? You like a challenge?
I've been being the CEO of a very big group for about 10 years before that, and I think the time was right for me to take on another initiative and a smaller business to build it up to the size that we built up Li & Fung to. That's what excites me, is this idea that I can grow something from a $4 billion business, actually $3 billion when we took it over, to a $20 billion business one day. That's what excited me about when I took over Li & Fung. Think about when I started Li & Fung, it was a $3 or $4 billion company. When I left in 2014, it was a $20 billion company. I want to do the same thing again. The next generation, Spencer, was ready to take my place. And so it gave me an opportunity to really get into the brand business, which I love.
But instead of owning the runway with its own labels, Global Brands Group sketched up a plan focused on licensing, gathering a star-studded portfolio including Katy Perry, Calvin Klein, Fry, Spider, Biotherm, and Kenneth Cole.
I took a different tact. The company took a different tact. We're going to be a portfolio of brands. And to have a great portfolio of brands, you cannot start from scratch. It would take you much longer than we're all going to be alive to create a whole big portfolio. Think about the luxury portfolios. It took them 100 years, 200 years to get there. So we knew that we couldn't have a portfolio unless we either bought a group of them, but that would be limited. And that would
require a lot of money.
Require a lot of money, huge bets, and it would be, with this fast-changing world, I'm betting on something that maybe not a great brand.
So this was a safer option.
It's a safer option, and so we look at it as a portfolio.
So Bruce, how do you go about picking the brands you want to license?
So every time we license a brand, there's a big investment, and there's a big commitment. And it may be opening stores, people, producing goods, design teams, everything that goes along with it. So we spend a lot of time deciding, should we bring on a new brand or not? Because it's a very long-term commitment. It's not something you can get in and get out. It's at least 5 years, at least, but we're looking really for 20 or 30 years.
Are you very picky when it comes to the brands you want to invest in?
Very. I mean, because it's like a marriage. You're expecting to do this forever. Hopefully you never have a divorce. Getting into a brand is a lot easier than getting out of a brand. So we don't want to go that route. Yes.
The CEO now wants to make GBG the biggest brands company in the world.
We're being asked by many different brand owners to license to us. I don't think the issue today is for us to get licenses. The issue today is for us to decide which licenses we want to take.
Even if it means, Rockowitz says, fixing troubled brands.
BCBG is a great brand. People still like it. It's still important. But the business itself had a lot of issues. Had too many retail stores. And so the losses from the retail stores was weighing down the company. So we take this brand over, reposition the distribution of the brand, improve the design of the brand, and then maybe globalize it and bring it to other parts of the world. That's what we do. There's a lot of opportunity to take brands that are not impaired, but the business is impaired, and fix it.
The US is your biggest market. You're based in Hong Kong, and like you say, China is at your doorstep, but you
Yes.
have a very small presence here in the region and even in China. Are you likely to change that?
I'm here, because I am focused on changing this. We know the biggest growth over the next 10 years is right here in China and the rest of Asia. Places like Korea, Indonesia, the Philippines. There's huge growth ahead of us. But we have to make sure we have the right platform, have the right people, and the right brands, and the right product. The product that sells in the United States and Europe can't be exactly the same. Some can be the same, but there has to be some changes because every taste is different around the world. And so we're small because we decided to come here, when I say come here, actually to sell to this part of the world only about 3 or 4 years ago.
Give me some numbers. How big could China be for you as a market?
I think it's at least $1 billion market, US, for us. I don't know when we'll get there. It could be 5 years from now. It could be 3 years. It could be 7 years. It's a wild card. We don't want to grow faster than we can handle.
The US is your biggest market.
Yes.
How confident are you that growth there will continue? And where do you see consumer confidence under the Trump administration?
Well, first thing is, when you look at the history of sort of retail growth, it's been pretty consistently growing about 4% in the United States through thick and thin. There was a blip in 2008, but go back the last 15 years, it's continuing. And people talk about the death of retail in the United States, and that's so overblown. There's a transformation of retail, and it's not all e-commerce. People like Costco and Walmart and all different parts of the market, TJ Maxx, some of the department stores, are doing well. As they evolve and they make malls more exciting, people come back to the mall, and then retail will be better in the mall. So you see health clubs, fitness centers being built. You see SoulCycle going into some of the malls. You see all kinds of components of experiential things. That's going to keep pushing excitement for selling retail. It will not go away. And now when you talk about Trump, the economy in the United States is still vibrant. And with Trump, without Trump, because of Trump, I don't know. There's definitely a lot of turmoil. I would never say that it's harmonious, the US government right now. And I would think even the president would probably say that too. But it hasn't affected yet the consumer. And maybe they're entertained by what goes on every day. And eventually people get just bored with it, I'd say.
Regardless of politics and Trump, the US will continue to be your biggest market.
That's for sure. And when I talk about China, high growth, but it's small. So if we grow 10% in the United States and we grow 40% here, it's going to take many years for China in our business to catch up to the United States.
Last fiscal year ending March, you posted revenue of $3.9 billion US dollars, an increase of 11.6%. How do you expect to do this year?
Double-digit growth in the retail industry or as a wholesaler, because we sell to retailers, we have some retail stores, is huge. In this time, because generally a lot of people are not growing. In fact, generally a lot of people are going the opposite way. So we're happy to have double-digit top-line growth. I would say as a company, that's pretty much where we'll be over the next few years. Maybe a little bit more, maybe a little bit less, depending on what we do. A lot of that growth is coming from new initiatives, like BCBG. When you look at BCBG, it's a very big business. It's a $600–700 million business in the past. After we reposition it, it'll be a multi-$100 million business. So that's incremental growth that will come and almost be double-digit growth as soon as it's annualized. And then our existing brands are growing. We have some that are doing extremely well, and there's some that are not doing so well. That's why you have a portfolio. Overall, I think people can look to global brands to grow top line 10 to 15% each year. That's kind of where we're positioned.
Well, if you look at your margins, they've been doing pretty well, over
Yes.
30%. What are you doing to improve your margins?
Since we spun off, we've improved our margins almost 500 basis points, maybe more, maybe 600 basis points.
What are you doing behind the scenes for that to happen?
We did a lot. I mean, first we improved our brand portfolio, so we have better selling power, and you can charge higher prices. But the main thing is we improved our sourcing, and we got better prices, new countries. We really worked on the efficiency of the whole sourcing model.
How much of Li & Fung's sourcing network are you optimizing on to bring down costs?
They're a big part of us. You know, we're a spin-off from Li & Fung. More than 50% of our business comes from Li & Fung today, and I don't see that changing at all. I think they're a great sourcing partner.
Many brands today are cutting out the so-called middleman, going directly to the factories themselves. Is it only a matter of time before they say to themselves, hey, we will handle the sales and distribution channel ourselves? In other words, how does a company like Global Brands Group stay relevant?
Well, first thing is we're very focused on being best in class on what we do. So as I said, we're one of the largest, if not the largest, kids company in the world. And in the men's and ladies area of our business, a lot of our business is driven by people that are buying a brand and don't want to operate. They're buying it for an investment, and then they want to license it to us. In the whole men's and ladies area, we have between 10 to 40-year agreements. So it's many years out that people could take it back if they want to. I don't envision that. Nobody's going to go direct to a factory. They would need to take the brand back and do it themselves, which basically, as you're saying, cutting out the middleman. But the history shows what they're licensing to us, they make more money by licensing it than doing it themselves.
So you will stay relevant?
Definitely will stay relevant. I mean, if you talk to my management, especially in the United States, they will tell you, and they're like pinching themselves right now, how we're being inundated by some of the greatest brands and people that are buying brands, that they would only buy the brand if we would take the license. And so we're more than relevant today. And what's happened is quite unique, is that we consolidated a lot of smaller businesses to become Global Brands Group. So we've become this large licensed company that nobody's ever seen before. And it's given us an opportunity in the market to take on a BCBG, to take on Spider, to take on Joe's Jeans, to take on Jones, and all these brands that we've taken on. There was no company there that can handle that had the platform to do it.
Don't go away. More with Bruce Rockowitz, CEO of Global Brands Group, in just a moment.
The cycle of brands is going faster. It's speeding up. Brands may become less relevant quicker. And so the future of speed is all in the design and development process.
Managing Asia, we'll be right back.
On Alibaba, their platforms, we're going to work with them.
How much revenue and sales do you see coming from e-commerce for Global Brands Group?
Today it's about 15%, and I would say it'll go to about 25%.
Time frame?
In 3 to 5 years. And that's probably a place we're comfortable with. I don't see the market going to 50-50, or I think the market will end up around 25-30% online.
You say speed is everything in this online digital world. Has it somehow shortened dramatically the product and design cycles, and how quickly do you have to move to clear your inventory?
Well, first thing is, you're 100% right that speed is everything. And I keep talking about that. If you think about it, if you can wait to the last minute to design something and make sure it's right, you're going to have no markdown. You're not going to have to discount it because you're basically producing what you want. The past was really inefficient because people were just producing a year out, designing a year out. By the time it got to the store, everything could have changed. And it goes in the store, and what's the first thing they do? Is they mark it down. That is a very inefficient market. Production cycles are not going to get much faster because they're really at a high level of speed. What's going to change, and is changing, is the design process, the development process, and also the approval process of the production. And we're using a lot of technology today. Before, you would produce a sample in a factory in China, send it to the United States. Our people would look at it and say it doesn't work. Send it, then they would give the changes, wait 2 weeks, another sample. Think about how many months that would take.
But now, how long does the whole process take?
We can design and produce within 45 days, but it depends on the category. In clothing, we're using 3D design. So instead of making a sample, we're putting it on a screen, and you can turn it around, you can look at it. We're doing fit approval via the internet, so the factory and our people can be together in space, basically, and do the approvals, so we're not sending things back and forth. And so the future of speed is all in the design and development process. We have a long way to go.
What do you reckon is going to be the next phase of global retailing? What are you seeing? What changes do you expect to see?
Well, I would say even Jeff Bezos, who's one of the smartest guys, doesn't know, because it's changing so rapidly. But when I look at a retail store, and today it's one of the most inefficient ways of doing business. A retail, think about it. People design it 6 months out, 8 months out. They don't know what customer is going to come into the store. They design it for a market that they're not even sure what's going to be. They put the goods in the store and they sit and wait.
So in future, there's going to be more accuracy?
It's going to be more accuracy. You think about online. Why is online so strong? The service and the way to personalize. When you come into the site, they know who you are. They know your buying pattern. They know what your fit is. They know everything about you.
That sounds scary.
But that's how it is with online. None of that technology is being used in the store. This whole machine learning is going to now be implemented in stores. And it's going to change sort of the whole face of retailing. If you want, and you allow it, you'll walk into a store and they will know you're there.
Don't go away, coming up next.
Living with Coco has taught me that celebrities can be just normal people. Like David Beckham, he's a good example, but he's one of the greatest people you can meet.
Managing Asia, we'll be right back. You're married to Hong Kong-born American singer Coco Lee.
Yes.
And in the business world, you've managed to nab high-profile celebrities like David Beckham, Katy Perry, to ask them to sign a joint venture with you to endorse their own line of clothing and accessories. What's it like hanging out with the rich and famous?
Well, first thing is, the rich and famous are the same as the unrich and not famous. They're people. And to be quite honest, living with Coco has taught me that celebrities can be just normal people. We've been together for, I think, 14 years. And she's as down to earth as anybody who's not a celebrity. So I would say from the idea that it's so glamorous, I think she would affirm that it's not that glamorous. We have normal lives. We work hard. She works very hard. I work very hard. We want to see each other. It's hard because we travel. Of course, at times it's exciting because of the people you get to meet. Like David Beckham, he's a good example. But he's one of the greatest people you can meet and a greatest person. And so I would say what's important to us as a group is not that if they're a celebrity, it's the type of person they are. And Katy Perry's another one. She's great to work with. She's very hands-on, and she resonates really well with the consumer. David, for sure, globally has this huge appeal. Both, I've never seen a guy like that, but both to men and to women. I would say that it's part of my life, and I don't know any different. It's been a long time.
Any difficult personalities that you worked with?
No. In fact, there's some that wanted to work with us, which I won't name, which we chose not to because it's too time consuming.
To manage their egos?
To manage, I don't know about their egos, but to manage their business because they need a lot of time. I'll give you an example about David. When I first met David, we were going to meet and have dinner. Actually, it was here in Hong Kong. So we made up to meet at 7:30. I come at 7:30. They tell me he was sitting in the lobby of the restaurant for 20 minutes before, making sure he's on time. Because he's an athlete, right? And they need to be on time. So he shows up on time. And then Coco was going to come for dinner that night. She arrives a little bit late because of who she is. just because that's what happens. She was a little late, and David gets up and brings a present to her. He brought from London, never met each other, and brings a present from Victoria, and those kind of touches, you can imagine how impressive that is to people. And I knew when he did all this stuff and he shows up on time, I want to work with him.
He's reliable.
Very reliable. In fact, all the celebrities we work with are very reliable. That's important to us.
Let's talk about another relationship that you have, and that's with the FUNG family.
Yes.
Global Brands Group spun off from Li & Fung in 2014. You used to head Li & Fung, and now CEO of Global Brands Group. What sort of business relationship do you still have with the FUNG family after all these years?
I've been with the FUNGs for 17 years, which I just realized, and since 2000. So it's pretty remarkable. They're amazing people. I don't necessarily need to work. I love coming in. I love them as partners. They've been great. They're very entrepreneurial. They're very supportive, and they're very smart. They will say, I am sure, because I've heard them say it, that I'm part of their family. They will say over and over, "You're our family," and they treat me like family.
Well, they spun off the group, but the family itself still owns a stake
Same
in Global
stake.
Brands
Yes.
Group.
Yeah,
Do they interfere in the way you run the company?
No.
Do they get involved in the decisions that you make?
William is the chairman of the company. I'm the vice chairman, and we kind of segregate what William does and what I do. I run the business, and he runs the board. And we're pretty clear about that. But of course, any major decisions, we sit down. We're meeting on Saturday. Because they're very busy, we tend to meet on Sunday, Saturday, middle of the night, early morning.
Middle of the night.
Middle of the night. It could be a 12 o'clock meeting.
That sounds demanding.
It's been that way their whole career. They have more energy than any 25-year-old.
They don't sleep?
Just at the meeting. I'm joking.
Well, you're 58 years old. You're Canadian. You spent almost 30 years here in Asia, in Hong Kong. You've been here since 1980s. Now heading Global Brands Group. How would you describe your leadership and your management style? What are you like as the boss?
Well, I think you have to ask somebody else that question. But what I'm trying to do is surround myself with what I consider the best people in the industry, whatever business I have. Because as business gets bigger, you cannot do it all yourself. And any CEO that is so demanding, hands-on, and trying to dictate everything is going to fail. You cannot become big. You can be a small business. So I give people a lot of leeway. I direct them, I motivate them, and I make sure they're the right people, and that's key.
Well, after spending so much time here in Asia, is your outlook more Western or more Asian?
I honestly don't know. I really don't know. I think I'm a real mix. I'm Eurasian.
And finally, it's been 3 years since the spin-off from Li & Fung. What's your great big vision for Global Brands Group? Where do you see the company in the next 5-10 years?
I for sure want to get to a $10 billion company.
What sort of time frame are you looking at?
As soon as possible. I would say 2-3 year plans, because we're in this one. So about 6 years from now, to at least get to a $10 billion company. And I'd be happy if we get to that scale. At the same time, that would probably mean we're a great company, because you won't get there unless you are a great company. So we want to create something over those 6 years that's never been seen before in our industry.
And I've been speaking with Bruce Rockowitz, CEO of Global Brands Group here in Shanghai. Hope you've enjoyed the program. Do check us online at managingasia.cnbc.com for more exclusive leadership insights. Until next time, I'm Christine Tan. Thanks for watching.